Hey everyone, and thanks for jumping back into the Macroverse. Today, we're going to talk about the US dollar index, or the Dixie. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. The US dollar has taken a pretty big hit over the last few months. This was a path that we talked about a lot on this channel. And when we first started mentioning this idea was back over here in September. We said the most likely path for the dollar is to rally when they cut rates to 110. The idea was to sweep this high, go to 110. I think I actually tagged 110 and did, and then to collapse into the post-election year, right? And then we did, I obviously I post the charts on Twitter so you can see the idea. Start the rally here, rally up all the way up to about 110, sort of sweep this high, and then collapse down here into this range, right? Into this range by about the midpoint of 2025. And now that it's happening, what's really interesting, by the way, is when we talk about this stuff, back over here with rate cuts, and I mentioned it, there was a lot of pushback. A lot of people were like, well, no, they're going to cut rates. There's no way the dollar's going to rally. And then it did. And then when it rallied, you're like, well, now it's going to go to all new highs. And of course, it crashed just like it always does around this time of the year. But what's really interesting is that a lot of people are now starting to lose faith in the dollar with respect to other fiat currencies at around the same time that they always do. Now, if you follow this channel for a long time, you'll know that this is a very pro-Bitcoin channel. And one of the reasons for that is that the purchasing power of fiat currencies is just going asymptotically to zero, right? So Bitcoin is sort of the answer to that. If they're never going to stop printing money, then you can put your money into something else that has a fixed supply. Now, obviously, supply is not everything, but with Bitcoin, there has been plenty of demand for it. You have ETF flows, you have, treasury companies, Bitcoin treasury companies, and then you also have just the regular DCAers. And then finally, you have people converting their altcoins to Bitcoin. So, Bitcoin, obviously, for a long time has been the sort of the solution to the problem of just an ever-expanding debt, right? Ever-expanding debt. And Bitcoin has been a timely solution. What's really interesting, though, is that when we think about the dollar, obviously the purchasing power is going to go down over long enough period of time, even over a short period of time. The purchasing power will go down. But when we talk about the dollar, you have to remember, we're not talking about the dollar here compared to like Bitcoin or gold or anything like that. Where the dollar, the US dollar currency index, the Dixie, it's just a comparison of the dollar against like a weighted basket of other fiat currencies. So to say that, if you're bearish on the dollar, it means you're bearish on the dollar with respect to other fiat currencies. If you're bullish on it, it's just with respect to other fiat currencies. It's not to say that it's going to outperform, equities or something over a long period of time, because it never really has. It may be over a short period of time, but never over a long period of time. And so I want to talk about the dollar here, because it seems like we're getting into this point where a lot of people are like, oh, well, it's just going to keep going down forever, and they're starting to lose sight, I think. There is a longer-term trend here that I think is worthwhile to point out, and let's go ahead and do that. So you could argue, and let's switch this to a regular scale, you could argue that the dollar has been in a massive parallel channel basically since, what, like 2008? Since the financial crisis. In fact, if you were to just connect the lows here, you can see that the dollar is basically now at the bottom of this channel, right? And again, it's a little bit hand wavy. I'm not going to draw it perfectly, but the general idea is that there is a channel that you can draw, and maybe you could argue that it's potentially breaking down, but it also did the same thing right here as well, and then it then recovered back up. It depends on how you want to draw it, right? Like, do you want to connect the highs, or do you want to connect the lows? If you connect the highs, it sort of looks like that, right? Where you have, you basically see that we're currently at the bottom of this channel. If you want to draw it so that you connect the lows instead, you can see that we're currently at the bottom of this channel and that we've just deviated outside of it a couple of times to the upside. But the point is that the channel has been a fairly reliable channel for the dollar. And anytime it's down here, people say it's going to zero. And anytime it's up here, it's like, people think the world's ending. But this pattern is something we have seen before. Okay, look at the last two cycles. Look at the last two cycles, and you'll see how similar it is. 2 cycles ago, the 2017-2016 cycle, you can see there was also sort of a low that the dollar held for a long time. Same thing as this cycle. You see that low? Very similar, right? Very similar move. In fact, you can see the dollar sort of had a fake breakdown right there. It then started, you can see it sort of started to break down right there. You might even want to draw this trend line a little bit higher off these other, main support levels. But the point here is that it eventually broke down. And when it broke down, it was the post-election year, right? Post-election year. In 2025, the breakdown occurred in like August, September. This cycle, it occurred in April, right? It occurred in April. What's interesting, though, is after the drop below the low, it then had a rally back up, just like here. And then it sold off into the final low of the cycle. And I gotta be honest, right? Like, it seems like we're not that far away from potentially sort of the final low. I don't know. Like, I'm not in the business of trying to call the bottom on the Dixie, because frankly, no one really cares anyways. But it wouldn't be that surprising to me if in a few months, it seems obvious that we were near a low, right? And that it starts to go up. And one of the reasons I think that the narrative right now is that it's going down is because of the sort of the recent relatively perceived weakness of the United States against its trading partners. All the tariffs obviously have taken a hit, but we also have, these tariff deadlines coming up. We're likely going to get more rate cuts. You can see that the last time we got rate cuts in September, the Dixie rallied a lot, and we're probably going to be getting a rate cut this September as well. If you go to the CME FedWatch tool, you can see there's basically like a 75% chance. Let me reload this to see if it's changed. We had some weak job data earlier today. It's about a 70% chance, I guess, of 25 basis point rate cut, and then an even higher chance of a 50 basis point rate cut. Only about a 5% chance they hold rates at this level in September. So when you look at the dollar, keeping in mind that they're probably going to be cutting rates in September, I wonder, to me, it seems like there's a high likelihood that the dollar is going to get a bounce back up. I don't know exactly when, and it might be one of those things where it doesn't occur until September. Perhaps what it does is it just does something like this, where it comes down into these lows and then just hugs these lows for a while and then gets a rally. And I don't know exactly where the bottom is, but this trend line has been respected for a long time. And I remember looking at this trend line when I drew out this path, right? When I drew out this path, I remember looking at that trend line back then, and that's why I didn't draw this arrow any further down, because I didn't really think it was going to go back to 90, right? Like, my base case for the dollar is that it's likely going to be a higher low compared to last cycle. That would be my base case. Again, I know that's a crazy thing right now maybe to think about or talk about, and obviously a lot of people are going to think differently, but that's kind of how I'm thinking about it right now, is that it will likely find a low probably over the next couple of months. One of the things to consider as well is that in the 2016-2017 cycle, the dollar did go lower into 2018. So it's important, to remember that. But one of the things I want to point out is if you look at the year-to-date ROI of the dollar, sorry, I clicked on the wrong thing. If you look at the year-to-date ROI of the dollar in 2025 and then compare it to 2017, it's basically already dropped the amount that it dropped in 2017. We just achieved it a lot sooner this year than in 2017. So there is a possibility that the majority of the losses for the dollar are already behind us. And that while it could go lower, I don't know that it's going to go that much lower. Now, I'll be happy to come on here and say I'm wrong if you see the dollar down at like 90 or something. It dropping would probably be a good thing for risk assets. But that's not always true. Even over here, right? I mean, the dollar was dropping in March and April, and risk assets went down, right? Sometimes the dollar drops, and it's not a good thing, right? The dollar dropped in over here in like 2002, and assets went down. So the dollar dropping is not always a good thing, as many people just found out a few weeks ago. But my point here is that everyone likes it. You know, everyone loved it when I sort of drew out this path, and because they're like, oh, well, it's going to collapse into the post-halving year, post-election year, like it always does. But now that we're down here, right, now that we're halfway through the post-election year, and now that we've already seen a lot of the losses that we've saw in 2017, if you look at 2020, you can see, and 2021, I mean, 2021, the dollar went up, but 2020, it was sort of going down for most of the year, and you can see that we're already well ahead of those losses. And again, I'm not suggesting that it won't go a little bit lower. There's a good chance it could, and maybe it gets a little bit of a bounce after the first rate cut and then goes a little bit lower into the midterm year. It's a possibility, but I think that if the time to be bearish on the dollar was back over here after it swept this high. That was the time to be bearish on it. I think that when you look at this chart, if you were to be objective about it, it just seems like we're getting close to a low, right? It seems like we're getting close. Now, guys, remember, sometimes the dollar goes up and risk assets also go up. It's not a perfect correlation. You can prove that, actually. I mean, go look at the correlation coefficients, right? If you go look at correlation coefficients and you look at you have the dollar on here, right? Like, it's not very highly correlated over the last 60 days to total market cap or Bitcoin, right? This is not very correlated. It's not really positively correlated or strongly positively correlated or strongly negative correlated. If you look at over a year, it's very, very low correlation to the cryptoverse. I think a lot of people think that if the dollar goes up, that Bitcoin goes down and vice versa. And while that tends to be true in midterm years, right? In midterm years, like in 2014 and in 2018 and in 2022, there's plenty of times throughout other years where the dollar goes up and Bitcoin goes up, or the dollar goes down and Bitcoin goes down, or vice versa. So to talk about the dollar in this way is not necessarily an attack on your altcoin. Like, I'm clearly not talking about your altcoin. I'm just simply saying that I wonder if we're going to look back at this in a few months and just see this as sort of like an obvious bottom for the dollar, and everyone's just freaking out about it right now. You could also look at more of the hand wavy indicators like the relative strength index, the weekly RSI. I mean, it's pretty low right now. And the last couple of times it's been at this level, it has gotten a nice bounce. If you want to go look at the daily RSI for the dollar, it just went oversold again. Last couple of times it's done that, it's gotten at least a little bit of a bounce. And then you could also look at it on sort of a monthly time frame and see that throughout this entire uptrend by the dollar, right? Throughout this entire uptrend, the monthly RSI has basically held these levels as support. The only time it went really well below this was in December of 2020, and it only went a little bit below it. And so I have to look at this and think like, well, there's a decent chance the dollar is going to find support. Even if it just means going up and then back down, like, there's a decent chance that in the short term, the dollar will find support. And then start to go back up again. So just watch this channel, because I could definitely see this channel, the integrity of this channel continuing to hold, and the structure of it continuing to be sound, obviously until proven otherwise. If otherwise starts to be proven, then I'll come out on the channel and provide an update and be like, look, it's doing something different. But when I look at the dollar, it just seems like it's getting pretty low. And with the tariff deadlines coming up, with rate cuts coming up, I wouldn't be that surprised to see the Dixie get a bounce soon. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.